Good afternoon, traders. It is May 27th, about 3 o'clock in the afternoon here in sunny Florida. My name is Daniel, and this is the view from my vantage point. I want to take a few minutes today to talk about versatility. What do I mean by versatility? Well, we're talking about VantagePoint trading software. VantagePoint does intermarket analysis, which means VantagePoint is doing analysis on the markets around the world. That's right. Intermarket analysis means VantagePoint is analyzing and finding relationships with the markets that are influencing the stocks, the futures markets, the Forex pairs, the ETFs that you might be trading either in the U.S. or abroad. VantagePoint is patented technology, and it can figure out and determine which markets are influencing the price of the target market you're looking at. So when I say versatility, what I mean is that type of analysis is valuable whether you are trading stocks or Forex or futures. It doesn't matter. It's so versatile, you can apply it to any asset class, any market, and you can improve your entries, you can improve your exits, you can be more effective, find better opportunities, avoid the poor opportunities, and just be overall more successful. This is about minimizing your downside risk and maximizing your upside potential. Let me show you what I mean. We're looking at a chart for soybeans. Some of you may have never seen a chart for soybeans, may have never traded soybeans before, but I'm going to show you in a matter of minutes how easy this is going to be. You can see at the top of the chart, you've got the name of the chart, soybeans, and the date range we're looking at is from the 7th to the 26th, the most recent forecast. On the right-hand side, you've got the price range for soybeans, and across the bottom, the dates. Already, you can see this is a regular candlestick chart, very easy to read. Now, whether you've traded soybeans or not, you can tell there's a blue line, there's a black line, and there's a green line on your chart. The black line, that's a simple moving average. Whether you've seen it or not, it doesn't really do much. It's just a trigger. The blue line, that is the key. When I talked about a second ago, VantagePoint doing intermarket analysis and finding all of the different markets around the world that are influencing the price of soybeans and using that information to generate a forecast, an actual prediction of what soybeans is expected to do, you can see that prediction represented by that blue line. The fact that the blue line is below the black line, VantagePoint is indicating that soybeans is expected to go down. Now, back here on the 8th, you can see that's when the blue line actually crossed below the black line. Well, that crossover point, that's the indication that that trend is about to start going down. Now, there's another predictive indicator on this chart. It's the green line at the bottom. That's the predicted neural index. And if you've seen this before, then you know what I'm talking about. That's indicating short-term strength or short-term weakness. When it's down in the 0, that's an indication of weakness. And when it's up here in the 1, like here and here, there's only 2 points on the chart that are indicating short-term strength in this market. Well, if you're trading soybeans or you're ever thinking about trading soybeans and you had this forecast, you could have seen that the opportunity to get in that position was May 8th. That means on that Monday, you could have jumped into that position, and as long as that blue line stayed below the black line, you can ride that trend down. Now, those of you that have never traded soybeans before, you can see that that blue line is below the black line. Nothing too crazy about picking that out on the chart, and you can see very easily that as long as that blue line stays below the black line and you hold that position, I drew this little purple trend line to see what we would have done. In 11 trading days, in every contract of soybeans, you'd make $2,600 profit in just 11 trading days. Now, for those of you that are trading soybeans, you know you're trading 3, 4, 5 contracts, 10 contracts at a time, and you can see from a profit standpoint, 10 contracts of that would be $26,000, quick and easy by using the predictive indicators in VantagePoint. It's quick and easy for VantagePoint to do this analysis because it employs neural network technology, which can do all this analysis very, very quickly, and it's extremely effective and accurate. So let's now talk about versatility again. There's soybeans. You just figured out how to read a chart in soybeans, right? Blue line below black, it's indicating a downtrend. If the blue line was above, it'd be indicating an uptrend, and the neural index is giving you weakness or strength. We're going to jump to the U.S. Canadian dollar pair. This is Forex, foreign exchange. Again, you may have never traded this before. It could cost you just under $2,000 to make a trade on a full-size lot. If you're doing mini lots, you're trading $200 or so of this. You can see how easy it is to interpret. Where's the blue line? Well, it's above the black line. When did it cross? On May 15th, okay? I got the crossover. Where's the neural index? Well, it's indicating strength. There you go. Again, very quickly. In just the first trading day alone in this pair, you would have made 157 pips, about $1,500 profit in one day. And then over the next several days, it just climbs to $4,100 profit in one trade in 7 trading days. Now, again, for one lot costing around, just under $2,000, you could see how grabbing 2 or 3 lots of this at the full leverage could really make your profits grow substantially. You're talking about $4,000 per lot. Having a tool that's as versatile and as accurate at predicting the trends like VantagePoint is going to take your results in your trading to a whole nother level. For you stock traders, let me show you what I mean, or for those people interested in trading stocks. This stock, Earthlink, I talked about this stock back on May 7th in a previous blog. You can look down below in the blog you're looking at now and see it down there. I talked about how the blue line was above the black line, and the Neural Index confirmed it way back here at the beginning of April, end of March. Since then, let's see, this was the day I talked about it. It was up 24% roughly in 23 trading days, 1% a day. Since that blog, since I communicated that information, Earthlink has just kept climbing, adding another 23%. Since the blog, this has gone up another 23% since the original forecast. It's about, 30 cents a share or so. Right there in one trade, you'd be making over 50% in profit in Earthlink if you were using VantagePoint and you had the benefit of these forecasts. When I say benefit, you can tell already it's easy to use, it's easy to understand and interpret, and it's simple and effective. That's the kind of tool you need in your trading arsenal. So give us a call today and find out how we can get you set up with VantagePoint. At the same time, leave a comment in this blog. Tell us what you think and what you'd like to see next, or ask a question. I'd love to address your questions on the next blog. Have a nice day.